Hey guys, welcome to another YouTube video on this channel. So today we are going to quickly go through some notes that you should be aware of, or some rules based on general ledger. You should have learned all this stuff in grade 8 in order to be doing accounting in grade 9 now. But we're just going to touch on it quickly in case you've forgotten over the holidays or something. So without further ado, let's get right into it. Okay, so if we have a look here, it's grade 8 and grade 9 accounting notes. I just want to fix them quickly. Right, just a quick abbreviation or a, I don't know, like an acronym or something, just to remind you of some things we like to use it when teaching the kids. It's something called dead and click. All right, so it's to help you remember what to debit and what to credit. All right, but only when they are increasing. Okay, so we debit all expenses, assets, and then of course the drawings account, and we credit liabilities, incomes, and of course our capital account. So click credit, liabilities, incomes, capital, dead, debit, expenses, assets, and then drawings account. All right, very quickly, we all know assets increase on the debit side and decrease on the credit side. Owner's equity income increases our equity on the credit side. Owner's equity expense, so all our expenses decrease our equity on the debit side. And then of course we have liabilities, which increase on the credit side. All right, let's just quickly have a look here. This is what I want to be focusing on today. All right, so it is the rules to posting to the general ledger. Okay, so there are, I think, 6 rules. Yes, there are 6 rules that we need to just go through very quickly before we can move on to actually looking at something. All right. So the rules are as follows. Number 1, ensure that all amounts are recorded correctly. All right. In order to be awarded the mark, you need to ensure that you enter the transactions correctly. All right. Identify which accounts are affected by the specific transaction that you are dealing with. Okay, so make sure that there's always 2 accounts involved. Remember, because for every debit there's a corresponding credit. All right. Identify what category the account falls under. So is it an asset? Is it an owner's equity income? Is it owner's equity expense, or incomes and expense? Or is it a liability? Okay. Then from there we move on to step number 4. Okay. Step number 4 is remember that the debit side is on the left hand side and the credit side is on the right hand side. So just to show you quickly, this is what a ledger account looks like. This is always the debit side, that is always the credit side. Alright, ensure that you post to the correct side of the ledger account. Refer back to rule number 3 to tell you which side to post on, of course. Alright, and then remember that for every debit entry there must be a credit entry, so there has to be a correspondence there somewhere. Okay. We are just going to quickly have a look at something else that we like to teach our grade 8s as well as going into grade 9. We use the word biscuit. Alright, now you are like, biscuit, how's that associated with accounting? It's just it's a word for you to, it helps you remember the 4 accounts when you are working with a trading business. Okay, so we know that a trading business deals with sales and cost of sales, and a service business obviously deals with current income. Okay, a trading business, sales, cost of sales, we ensure that every sales transaction makes use of Biscuit. Alright, so we are required to post to the 4 ledger accounts, which would be bank, sales, cost of sales, and trading stock. Alright, how do we remember these 4 accounts? If we look here in the word biscuit, we see that the B is big, the S is capitalized, the The C is capitalized and so is the T. Alright, so those are the 4 accounts here: bank, sales, cost of sales, and trading stock. Okay, when dealing with these 4 accounts, we need to remember the following rule. Okay, the 4 accounts are divided into 2 groups. Remember that there has to be 2 accounts involved in one transaction. Okay, so that's the minimum, right? 2 accounts minimum, right? These accounts always go or work together, right? How do we remember which to go together? So we look at the accounts that are closest together, okay? From left to right, so exactly how we read a book. So if we look here, from left to right, bank is first and then sales is second. So those 2 accounts go together. Then we have cost of sales and trading stock left over, so therefore those 2 have to go together, right? How do we know which one is debited and which one is credited? Here's a little trick to remember. The debit side is always on the left and the credit side is always on the right, right? So therefore bank is the first word that appears, and it appears on the left hand side of Biscuit of when we take the 2 accounts. So we take bank and sales as together, we put them together. So bank is on the left hand side and sales is on the right hand side. And then of course cost of sales is on the left hand side and trading stock is on the right hand side. So bank would then be debited and sales would be credited, cost of sales debited and trading stock credited. Alright, so why do we do this? When we receive money, we need to record how much did we receive and how much did we sell the merchandise for. Thus we record in bank and sales. Okay, but as a business we also want to know what was the value of stock that we sold. So how much did we buy it for before we put our markup on it? Okay, so as well as the value of the stock that we sold. Okay, so we make use of cost of sales and trading inventory or trading stock. Okay, we're going to go and look into an activity now very quickly involving Biscuit. Alright, so just to show you guys an example and where we are going. Alright, so we are given the 2 journals. Remember that when dealing with the whole accounting cycle, we first have to enter all our transactions into our journals before we go over to the ledger accounts. Okay, so journals first, then ledger account. Alright, so if we take a look at the 2 journals, they were completed for us, so it was the first thing that was done for us, and we just simply have to go and complete the 4 ledger accounts that they give us, okay, which is the Biscuit accounts. Alright, so if you look there in the CRJ, we have a transaction that took place on the 1st of the month, the 6th of the month, and the 27th of the month. Now, I always tell my kids that analysis of receipts is the till. So if you look here in this block, there's nothing. All right, that's because that person did not pay in cash. All right, so they're physical cash, physical money. Till, physical money. Okay, it's money that you get paid. It's not directly paid into your bank account. It's money that you put into your till that you at the end of the day have to go to the bank and put it into your bank account. Alright, so that's what I always tell in the kids analysis of receipts. So please, if the person did it EFT, do not put the amount in analysis of receipts, but it does have to go in bank. Alright, that is why we also don't total up analysis of receipts, if you wanted to know, because obviously at the end of every day we take that money and we deposit it into our bank account. So if we had a total over there, there would be a problem, because then how is that money sitting in our bank account? Alright, now let's take a look here. We have totals here at the bottom. We have bank at 1,000, sales at 1,000, and cost of sales at 500. Alright, in our CPJ, we obviously pay money out. So CPJ is where we make payments. Right, we have our bank sitting at 950, our trading stock at 500, our stationery at 100, and telephone at 350. Right, now they require us to do our ledger accounts. So starting off with bank. Right, When dealing with the cash receipts journal, we've always, instead of putting all these transactions in separately into the bank account, we can group them together like they've done here, where they've added the amount together. Alright, and this is known as total receipts. Okay, it comes from our CRJ as a folio, and it was for 1,000 Rand. Perfect. Alright, now remember, for every debit there has to be a corresponding credit. Now we know that bank and sales go together, so the sales amount is part of this total receipts over here. Okay, it's part of the total receipts. Okay, so if, let's say, that 50 Rand wasn't there and that was 950, for example, all right, that would then, that 950 is part of that 1,000 over there, if that makes sense. So it's part of this total receipts here. So in sales, on the credit side, we would have the contra account, which would be bank, and it also comes from our CRJ, and it would be, in this case, 1,000 Rand, because that's what it totaled to. Okay, right. So we are not finished there yet, okay, with our bank accounts specifically, all right, because we also made payments during the month. So let's quickly just do our payments for the bank. When dealing with payments, we would also group it and call it total payments. Right. This, however, comes from our cash payments journal, and this amount was for 950 Rand. Okay. Now, they will tell us eventually to balance the bank account or balance the accounts, which we will do in a moment. We are just going to finish the other two accounts, and then we will come back to balance the banking account. Right. Now we move on to the next account, cost of sales. Cost of sales is found in the CRJ, and we know, according to Biscuit, that cost of sales and trading stock go hand in hand. Alright, so we would have trading stock on the left hand side, so on the debit side, trading stock, and it comes from our CRJ, and it was for 500 Rand. Okay. Cost of sales is not involved in CPJ because no sales takes place in CPJ. Okay, we don't sell in CPJ, right? And of course, our contra account would be trading stock. So in trading stock, we'd have cost of sales, and that would be 500 Rand. Okay, it also came from our CRJ, right? The reason why it's on the credit side is because it's decreasing our stock. So it's decreasing the value of stock we have left in our business. Right. If you take a look here as well, in our CPJ, if you see there, we bought stock, okay, on the 20th from PS Suppliers. All right, we bought trading stock, okay. That would go on the debit side because it is increasing our trading stock that we have in the business. So the account that would be involved is bank and trading stock. Those would be the two accounts involved. So we would debit trading stock, and that's from our CPJ, and that would be for how much? 500 Rand. Okay. Now our credit entry would be in bank, but if you look here, that trading stock amount is part of our total payments. Okay, so therefore we don't write it again, because it's part of this one category called total payments. It's part of this 950 that's there in the account. Okay, I just want to focus this thing a bit. Oops, wrong button. Wrong button. Let's just wait for it to finish what it's doing. Okay, beautiful. There we go, it's focused itself a bit. Alright. So if you see there, this 500 Rand is part of that 950. Okay, now we are finished with trading stock. Let's just go back. If they told us we must balance the bank account, we would then follow the 5 steps to success, which that is mentioned in another video. Okay, so if you want, I will put at the end of the video, I will link the balancing video in it, alright, so that you can go and watch how to balance. But if, in short, all we would do is we would add up the debit side and add up the credit side, and see which side has got the higher amount. Use the higher amount as the total for both sides, because the debit side equals the credit side. Alright, and then find the difference. So that's the difference would then be called balance, that we would carry down. Okay, and that would be of 50 Rand. And on the 1st of the next month, we would have a balance that we would bring down, or it was brought down, of 50 Rand.